Business leaders head to China as relations between Canberra and Beijing warm. A strong weekend for the housing market raises hopes that the market downturn, at least in Sydney and Melbourne, might be ending. And there's a 27% chance we could have another virus outbreak like COVID over the next decade. It's Monday, the 17th of April, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up with Josh Gilbert, a market analyst at eToro. We've spoken to him before. He is always fantastic.
Yes, a good man, Josh. This time around, we talk about cryptos. Now, cryptos have had a really good run this year. They've bounced quite hard. Been all sorts of changes in that sector over the past 6 months or so, the collapse of some of the infrastructure around crypto, so that sort of cleaned it out a bit. So we talk about that and what next for digital currencies. And I suppose at the end of the day, what Josh says is all this change is actually good for cryptos because it makes it a stronger asset generally. So interesting chat.
Yeah, really good one for investors. It's coming up a little bit later on. The main story this morning, though, Sean, representatives from some of Australia's biggest companies, including ANZ and Rio Tinto and Cochlear, are heading to China next week in the first industry delegation to visit the country in 3 years.
The thaw between Canberra and Beijing continues, and the 6-day visit next week to industrial commercial hubs like Hong Kong, Shenzhen and Shenzhen are part of the first official delegation organised by the Australia-China Business Council with the backing of the federal government. The focus of next week's delegation will be potential green energy collaboration between Australian and Chinese companies, according to the Financial Review. Now, cooperating with China on climate change has been among the priorities of countries and companies seeking to re-engage with Beijing because green projects are typically not as politically sensitive as investments in other areas.
It seems like there's definitely more communication between the two countries, though perhaps you wouldn't quite describe it as friendship just yet.
No, probably not friendship just yet. China last week agreed to review its tariffs on Australian barley. That certainly makes us a little more pally, or chummy might be a word.
I don't know whether pally and chummy are really words that you can use to describe kind of political relationships. Though, what is the threshold at which it becomes friendship, that it transitions? Do you know because they follow you on Instagram, or is it?
Well, they pick up and answer the phone. I think that's the issue, isn't it?
Well, I suppose in that case we've got a fairly low bar. The threshold's fairly low for where we become friends.
Yeah, China took 3 years under the Morrison government, didn't pick up the phone ever, refused to take the call. So
this is a very positive sign that we might be sending business leaders there.
Yes, that's the point, really. I mean, and remember last week, China agreed to review its tariffs on Australian barley. All sorts of hopes that will extend to wine, timber, seafood and beef. Also, last week, China's Deputy Minister of Foreign Affairs met senior Department of Foreign Affairs and Trade officials here in Canberra. And in the last month, the bosses of Rio Tinto and BHP, as well as Andrew Forrest, Fortescue Metals founder, have been in Beijing. So there's plenty going on. China remains Australia's biggest trading partner and very important to our economic health. Later this year, Anthony Albanese is also expected to visit Beijing, although a formal invitation has not yet been issued. That would pretty much conclusively show that the two countries are getting closer. Trade Minister Don Farrell is expected to visit the country in coming weeks. Over the weekend, he said that things were warming up, definitely.
So, Sean, why is this the case? Is it just economic?
Look, it's mostly economic. China needs to kickstart its economy post-COVID. And in the case of Australian exports, Beijing wants high-quality, affordable commodities, things like coal and iron ore, wine, beef, etc. The change of government last year here in Australia provided the impetus for a change of relations, but it goes beyond that. President Xi Jinping has very much been on a charm offensive recently, welcoming French President Emmanuel Macron last week. Of course, he's also visited Russia's Vladimir Putin. The world is slowly, or maybe not so slowly, shifting towards a USA or China bias, depending on how you view the world. And Beijing, I think, is working very hard on convincing countries not to blindly follow Washington. So primarily it's an economic imperative, but there's a diplomatic reason for all this as well.
Yeah, it's fascinating to watch it all unfold. How did local markets finish up last week?
Pretty well, really. The S&P ASX 200 closed Friday up 0.5% to 7,362 points. It was a better day for the big banks. All of them ended up on the positive side of the ledger. The big miners were mixed, so too the retailers, while Telstra ended the day higher. Good day for gold stocks, actually. Silver Lake Resources, West African Resources and Regis Resources all jumped sharply. Newcrest Mining ended the session up 2%, while Northern Star, which is the second largest of the gold companies here in Australia, closed up more than 4%. Oil and gas group Karoon Energy was the worst on the day, Michael, down around 5%.
And what happened over the weekend in international markets?
Well, talk about how much further US interest rates will go continues to dominate international markets. The bias remains towards at least another rate hike, and Wall Street ended lower on the weekend. In contrast, the Euro Stock 600, which measures the largest 600 companies in Europe, hit a 9-week high on the weekend, with the German exchange at its highest level since early last year. In commodity markets, Brent crude is trading just under $87 a barrel. Gold has fallen a couple of percent. It's around $2,000 an ounce, and the Aussie dollar heads into the new week buying about 67 US cents.
All right. We'll be back in a moment with the rest of the day's business news. Sean, there were more signs over the weekend that the housing market is bouncing, with double the number of listings and a strong nationwide clearance rate.
Funny concept that, isn't it? The housing market bouncing.
Well, yeah, usually. We have a lot of terms for it. One that you like to refer to is the housing market bottoming and kind of various other things, which all gives it a certain character, doesn't it?
Oh, can't help yourself. Early Monday morning. Yes, go on.
No, I'm done. I'm done. I've said my piece. Please go on.
I think the issue is that bouncing is present tense. And with the housing market, no one wants to actually say it's bottomed yet, because no one's really sure. So you want to have a present tense. So, okay, we'll go with bouncing. Look, the nationwide preliminary auction clearance rate over the weekend, or in fact for the 7 days up until last night, was 70% from 1,700 auctions, up 2 percentage points from the previous week, according to CoreLogic. The two big markets, Sydney and Melbourne, were particularly strong, with both cities recording clearance rates of 72%. In Melbourne, that was up from under 58% the previous week. What's even more impressive is that the numbers came in a week which started with Easter. Now, normally Easter, school holidays, etc., is not a particularly busy time for home sales. So this is quite impressive. Now, away from the big two cities, things aren't quite as strong, although Adelaide's clearance rate was 70%. Brisbane was at 56%. Canberra was at 49%, relatively weak in the national capital. Still, the signs are certainly positive in the housing market, Michael.
Sean, Treasurer Jim Chalmers has hosed down expectations for a federal budget surplus anytime soon, which is actually kind of an interesting image as well, isn't it? The Treasurer out there with a garden hose. I kind of picture it more of as a fire hose kind of thing, and he's just barely kind of holding it in place. But anyway, I get distracted. This is all because of the spending pressures from things like rising public debt interest payments, and then you've got rising disability and health and aged care and defence costs.
Yes, so Mr. Chalmers spent a couple of days in Washington late last week. He met all sorts of senior officials around the world, including US Treasury Secretary Janet Yellen. He said budget pressures were likely to intensify rather than ease in coming years. He said tough decisions are needed to provide cost of living relief in a responsible way. I think the budget, which is on early next month, is not going to be particularly pleasant, although let's hope there is some cost of living relief. Dr. Chalmers' comments came as two research papers, one local and one out of the US, suggest Australia provided too much stimulus during the COVID pandemic. Policies like JobKeeper overcompensated for lost income and, combined with ultra-low interest rates, pushed inflation 3 percentage points higher than it needed to be, according to Australian National University visiting fellow Chris Murphy. Now, the findings are consistent with a separate paper by researchers from the Federal Reserve Bank of San Francisco. That paper found that Australia was one of just 5 OECD countries who provided too much fiscal stimulus. Not really that much of a surprise, because if you think back, remember all those people working part-time, they might only work 6 hours a week, but they were getting paid for a lot more than that.
Yeah. It's a hard one to judge, isn't it? Because at the time, no one really knew what was going on. No one knew how long it was going to last for, or the level of support that was going to be needed in order to kind of keep people safe and secure during the pandemic. So it's interesting, this kind of commentary and criticism after the fact, when you've got to realise and keep in context the environment in which a lot of these decisions were made.
Yeah, and in some ways it's probably not really criticism. It's just factual. The fact that Chris Murphy is saying it was overcompensated. He's not actually putting a value judgment on that. He's not saying, hey, this is bad. He's just saying it was. And there's no doubt it was, I think, given what happened to interest rates. But that's, as you point out, that's not necessarily a bad thing given the circumstances.
Yeah, it's an interesting one, isn't it? Now, Sean, it's been a big week or so in the home delivery sector, with Milk Run last week closing its stores, and now Coles and Uber Eats are expanding their partnership, adding 500 stores nationally so customers can receive groceries within an hour.
What I found really interesting about this story, so each delivery placed with Coles through Uber Eats will be packed and delivered by an Uber driver or rider, not actually Coles staff. So the Uber person goes and picks up the groceries. The Uber driver will contact the customers if an item's out of stock, for example, give you a ring, say, hey, there's no light white. What do you want? That sort of stuff. Now, Coles started its partnership with Uber Eats for grocery delivery in 2019 as a trial, mostly to the metro areas along the eastern seaboard. It dropped the trial, but launched a partnership with its Liquorland stores. Now it's back using Uber Eats with a slightly different process. Coles also uses DoorDash. Woolies uses Uber Eats for delivery as well. It is very interesting. My local Metro Woolworths, I have noticed, has been promoting Uber Eats delivery ferociously over the past couple of weeks, actually.
It's really interesting, the idea that they would actually use the Uber Eats kind of drivers or riders to go and pick and pack the groceries themselves. If that was me, I'm the slowest grocery shopper in history. So I would not be able to do this within the hour kind of deadline. You might be able to get your groceries within kind of a 3 to 4 hour window if I was doing it.
Yeah.
And that's if you only live 10 minutes from the store. I need that much time in the shop. Now, speaking of Coles, Sean, Coles customers have been caught up in the massive cyber attack on Latitude Financial Services.
That's right. Customers who have taken out a Coles credit card through Latitude have had their private data exposed in the company's recent breach. I never like saying private data exposed, Michael, but let's leave that alone.
I went to the same place just then. I'm like, as soon as you said private, anything exposed, I'm like, ooh, this has the potential to get a little bit kinky. And fortunately, you went to the same kind of general kind of gutter zone.
Your influence is I was going to say rubbing off me, but we're never going to get there. Anyway, Latitude has been contacting customers for weeks, but only informed Coles Financial Services on Friday afternoon. Michael, you're not helping me here.
Sorry.
You only informed Coles Financial Services on Friday afternoon that its credit card holders' data had been affected by the recent cyber incident. It's not clear how many people are affected, though Coles historically has had about 350,000 credit card holders. Not sure how many of those will be hit by this attack. Latitude last week said it would not pay a ransom to the cyber criminals who stole data belonging to 14 million past and present customers.
Finally, before we get to international news, Bank of Queensland will cut its dividend when it announces its half-year results next week as the bank moves to improve risk management.
Regulators have demanded a material uplift in Bank of Queensland's risk and compliance management. And on Friday, the regional bank announced a $60 million non-cash provision around compliance and a $200 million impairment of goodwill charges relating to a purchase it made back in 2007. Put all that together and the bank this week will come out and say it lost money during the last half year. Bank of Queensland's share price fell 1% on Friday.
All right. International news, Sean, and leaders of the world's most developed economies have reached a deal to accelerate the phase-out of fossil fuels but failed to agree on a deadline to exit coal and left the door open for new natural gas investments.
Yes, so this is kind of the overriding deal is there, but not many details. The group of 7 nations said it would accelerate the phase-out of unabated fossil fuels so as to achieve net zero in energy systems by 2050, according to a communiqué issued by the group's energy and environment ministers. They were meeting in Japan over the weekend. The communiqué sends an important political signal that sets the tone for energy and climate conversations for the rest of the year. The real hard work, though, comes later. Failure to agree on a timeline to exit coal could well weaken resolve ahead of the UN Climate Summit in Dubai later this year. That's COP28. Nearly 200 nations will be there and they'll be pressed to phase out the fossil fuel. That's where the really hard work around negotiations are going to take place.
It's quarterly earnings season, Sean, on Wall Street, and the big banks are always among the first to report. Some of the nation's biggest banks have reported some very healthy profits.
Sure have. While some of the regional banks are struggling, JP Morgan Chase, Citigroup and Wells Fargo over the weekend all unveiled bottom lines of billions of dollars more than expected. JP Morgan, which is the US's largest bank, posted a 3-month profit of $12.6 billion US. That's a lot of money. Now, this is happening ahead of a potential recession in the world's biggest economy. And of course, during the period when Silicon Valley Bank and Signature Bank collapsed, those collapses, ironically, have actually helped the bigger banks because customers, depositors, have more confidence in the bigger banks than the regional banks. JP Morgan Chase, Citigroup and Wells Fargo have also benefited from higher interest rates.
All right, a fairly, I suppose, depressing story to finish on, Sean. There's a 27.5% chance that a pandemic as deadly as COVID-19 could take place in the next decade as viruses emerge more frequently, with rapid vaccine rollout the key to reducing fatalities, according to a predictive health analytics firm.
Yes, this story has got a lot of press in Europe. Climate change, growth in international travel, increasing populations, and the threat posed by zoonotic diseases. I had to look that up, Michael. A zoonotic disease is exactly as it sounds. Diseases transferred from animals to humans. Anyway, the increasing threat posed by zoonotic diseases contribute to that higher risk, according to London-based Affinity Limited. But, according to a report on Bloomberg, if effective vaccines are rolled out 100 days after the discovery of a new pathogen, the likelihood of a deadly pandemic drops to 8%. Still uncomfortably high, in my view. In a worst-case scenario, a bird flu-type virus that mutates to allow human-to-human transmission could kill as many as 15,000 people in the United Kingdom in a single day, Airfinity says. There have been 3 major coronaviruses in the past 2 decades: SARS, MERS and COVID-19, as well as the swine flu pandemic in 2009. If you take that into account, perhaps such a strong chance of another one doesn't seem surprising.
Now, up next is the Fear and Greed Daily interview. You're speaking with Josh Gilbert from eToro.
Yes, all about cryptocurrencies, why they've bounced so hard so far this year, and more importantly, what's going to happen next.
Yeah, it's a great chat. And of course, eToro is a supporter of the podcast. You've also got your regular Monday episode of Fear and Greed the week ahead with our resident economist, Stephen Koukoulas.
Yes, Stephen, probably looking forward to this week because there's actually not much going on. The Reserve Bank board minutes come out tomorrow. I think it's going to be a bit of a quieter week for Stephen, but we go into last week's labour force numbers, US CPI, where rates are at. Great chat with Stephen, as always.
And if you're looking for something else to listen to, check out the weekend edition from the weekend just gone. For any listeners who have been in touch lately asking where Safe Word, our old podcast, has disappeared to, it's kind of been reborn, I suppose, in the Fear and Greed weekend edition. So definitely worth a listen. And it's a very competitive program.
It is.
And it gets a little bit fiery. And this episode, I suspect, was our most fiery. And we've had some great feedback as well. And today's Mia, the most enthusiastic advocate, MEA, has written to us after the weekend edition and said, "Hi, Fear and Greed team." This is Daniel, by the way. Hello, Daniel. "Hi, Fear and Greed team. I thoroughly enjoy the podcast. Oddly, the podcast supplements my 20-minute run quite well, perhaps even better than my techno playlist. I'm writing to advocate for 2 things. Firstly, Mia's to receive a Fear and Greed mug for the office. How good an idea is that? And secondly, for Darude, Sandstorm, which is the song that we discussed last week, Sean.
Why'd you mention it?
To round out the afternoon report on a Friday for Sean Aylmer to keep his spirits high. Keep up the great work." Thank you, Daniel. You are definitely today's Mia. And I think the mug idea is a fantastic idea. Do you reckon we could talk to our Fear and Greed colleague Adam Lang to see if there's money in the budget to pay for mugs?
We can try. Though, Daniel, why did you mention that song? It's in my mind again.
Oh, it's a cracker. Anyway, we do travel down some tangents, but we are done for today. Thank you very much, Sean.
Thank you, Michael. Have a great day.
It's Monday, the 17th of April, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. Don't forget you can stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, "Alexa, play the Fear and Greed podcast" to catch the latest episode, and you can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.